You can do a ton of things correctly when trading, but if you do this one thing wrong, you can't make money consistently. You just can't. In this video, I sit down with an intern and review his juicy technical breakout trade in step-by-step detail, and where he made this one critical mistake. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. We hope you agree this is the top YouTube channel to help you grow your trading account. Okay, I'm here with a junior intern from our desk, and we're going to judge one of his playbook trades. We will score him on 10 criteria and give him a score for each of them to see if he's meeting the standard expected by us. He's got to get 80 out of 100 over the course of these 10 criteria. His playbook is titled, and it's a great title, and it's a great trade, Juicy Technical Breakout Trade. He does make one critical mistake. You have to enter at good prices. And we will break this down for you in step-by-step detail. I hope this gives you a clear example of how a professional trader thinks through a trade and what's necessary for you to make a good risk-reward trade with edge. Okay, let's meet SMB intern Sean, see if he passes his test in the hot seat, and get into his technical trade. All right, Sean, will you tell us a little bit about who you are, where you're at in your trading career before you share this playbook trade with us?
So I'm a rising senior at the University of Southern California. Started actively intraday trading when I came here to the firm this past June. Been interested in trading for the past 9 months. And ever since being here, I've seen a lot of progress as far as decision making, and these playbooks that we've been doing throughout the past couple months have been super helpful.
So you are a junior intern?
Yes, junior intern.
Not a senior intern?
No.
This is your first tour of duty?
Indeed.
Okay. We usually we ask you to do 2 tours of duty, a junior internship and a senior internship. So you're almost through your junior internship. So at the very beginning.
Yes.
So we should be easy on you.
I don't know if that'll be necessary.
Yes. we won't do that anyway. But... Okay, great. Let's do it.
All right, so the playbook trade I'm going to be going over today is called the Juiced Technical Breakout.
Can I ask you a follow-up question? Because I actually am curious about this.
Yes.
How did you get interested in trading? And
So
what kind of, you're in college.
Mm-hmm.
When you say you're doing some trading, like where do you do it? How do you do it?
So I had originally got interested in trading because I play a lot of poker. And kind of just through social media and then reading about, I kind of saw the parallels and how they're similar. And that really interested me. And then got down the rabbit hole of learning about options. I started trading on a broker called Tasty Trade and using a lot of their resources to kind of guide my learning. And then from there, a lot of research on Twitter. That's really where I got a lot of my information at first, and where I found SMB. And
we don't know how much longer Twitter's going to hang in there these days.
we do not. Yeah, maybe Threads takes the cake, but we'll have to see. Meta will be in play.
That'll be a big disappointment since we've been on Twitter for like 10 years and.
Yeah, that transition probably won't be fun for Kurt.
I don't know what we're going to do. It's a lot of work, but I'm sure they'll hang in there for a while. Okay, good. So let's see what we got here.
Yeah, so to get started on the bigger picture, you can see here in SPY, this level I have in the orange line, we recently broke out of that level. Tested a recent swing high. We retested the level that we broke out of and held it. And therefore, we kind of have confirmed this breakout. And now we're kind of starting to develop this range where SPY is consolidating. And we're not really looking at the market for huge kind of plays that are going to carry our trade, or they're carry along with our trade. So just to dive a little bit deeper, that orange line I was referring to is that 431.72 level. Qs trading very similarly. They've been stronger given the weighting of tech, right? Because all NVIDIA, AI theme has really carried hard in the big tech names. And with those being heavily weighted in Qs, they've been a lot stronger. And they're also trading in this range. So not much we're looking for to see from the bigger picture as far as influencing our trading decisions.
But the market's strong.
Yes, very strong. Yes.
So when the market's strong, that means breakout trades are more or less likely to work.
More likely.
Okay.
Because we kind of have those tailwinds, as we like to refer to them as.
Yeah, and when we're above key resistance levels and SPYs and Qs, breakout trades are more or less likely to work.
Breakouts to the upside, more likely to work, yes.
Okay.
Yeah.
All right, good.
All right, so to check out the intraday chart for SPY, you can see we kind of gap down, regain a lot of that gap in the pre-market, and then throughout the day kind of develop this range. So with that, I mean, and the low R vol, we're not really looking too much at SPY intraday when we're looking to make this momentum breakout trade that we're going to get to here in a second. But I mean, it's always a good thing to have in the back of your head, especially when you're trading the high beta tech names with the Qs. But in this case, not super relevant.
So I don't know if you've seen us do this before. You're junior intern, so we're going to judge you on 10 criteria. You got to get an 80 overall. What that means to you is you're tracking, you're doing the type of work that is leading to you progressing as we would like. Okay. So big picture is one of the things we'll judge you on, and we'll give you some scores as you're going along, and we'll tally it up at the end.
All right, sounds good. Hopefully I hit that threshold.
We're rooting for you.
All righty. So to look at the bigger picture, this trade's in Carvana, and Carvana's actually been a pretty hot topic as of recently. So you see that red line is a 20 level, and this past month, beginning of June, we had this huge breakout over that level. And one of the interesting things about Carvana is it's especially high short flow. We'll get to that in a second. But here you can see after we break out of that 20 range or 20 level, we kind of develop this range and we develop these like this supply zone, if you will. And that's going to become really relevant when we're looking to take this trade. And we're going to kind of dive into the foundations of why those highs are important given the short float and how the short float's kind of maintained its percentage even after this breakout of 20.
So when we're thinking about stock selection, we teach you guys to look for a news catalyst or a technical catalyst. Mm-hmm. Which one is this?
This is a technical catalyst.
Okay. And then we ask you guys on a scale of 1 to 10 to grade the catalyst. So for the technical catalyst, what grade would you give it?
I gave this an 8.5.
Okay, and why?
The big deal about this one for me especially was after we broke out of that 20 level, the short float was 50-ish%. And what we expect after those huge breakouts over important technical levels and these high short floats is that percentage to decrease. And we've seen this short float actually maintain almost all of that float. What that kind of leads us to believe is that now we have new shorts coming into Carvana. So for this technical setup, as we progress up to that level where we can expect a lot of people to be short, that's going to play a huge factor into this trade. And for that reason, 8.5 I think is pretty necessary. I would argue the other one's probably a 9.5. So this not quite there, but still up there.
Okay. All right, intraday fundamentals.
Yeah, so a lot of the big things we're going to look for is liquidity. So with the average volume trading.
Yeah, and I'll just fill in the blanks there. So when we're choosing a stock, we look for a catalyst. Then we judge it. If something is 10 out of 10, we're going to trade the stock. If we're judging it 9 out of 10, we're going to trade the stock. If it's 8 out of 10, we're probably going to trade the stock, but we're going to look for some price confirmation. If it's 7 out of 10, we're going to need to see a good setup or some price confirmation to trade it. 6, 5, 4, 3, 2, 1 out of 10, we're almost certainly going to pass. We want to save our bullets for good trading opportunities for good stocks. And so this is hitting the mark so far.
Yes, definitely agree. You don't want to put risk on those poor opportunities. So yeah, so diving a little bit in here, we can see the short float's at 49.77%. That's going to be a key factor in this trade. The RVO is only about 1.66. That isn't exactly what we're always looking for. We're looking for a lot of participants to be trading the stock. So typically we want that over 3. But in this case with the setup, ranking it as an 8.5, still something that I'm watching. And we'll see in the next couple of slides how the volume picking up is going to be very relevant and can give us that price action confirmation in this trade.
Okay, so when we find a stock with a catalyst, and then we score the catalyst to be high enough. In this case, it's 8.5 out of 10. We then need to check to see if it actually has the right liquidity for us to trade. That's what the slide Intraday Fundamentals is all about. Essentially, does it have the liquidity that we want? Because of the short float being almost 50%, that brings a challenge to us. That's going to potentially make this stock illiquid at times. How are you thinking through that short interest being so high?
So I think it's very important, especially.
Is it too high for us to determine that this is liquid enough? Or do we need to make adjustments to our trading plan because the short interest is so high?
We very well could. And I think it would be important to maybe, if you're worried about actually being able to get into a position, in that case, you probably wouldn't size as much or just physically not be able to size as big in this trade if it's a good setup for you. And that's something to note. If the trade really sets up great for you and then you try to get locates for it, that could be an option. But going into that, understanding that, okay, I might not get all the fills that I want to in this trade is important, and you definitely don't want to throw it out of the window and go full size and be confused why you're not getting those fills.
All right, let's give you some grades so far. Stock selection, 8.5 out of 10. Because the technical level is 8.5 out of 10. Mm-hmm. Okay? But good. Good stock to trade. Good enough technical catalyst for us to trade. Big picture, 9 out of 10. I think you're doing a good job recognizing how strong the market is and then how strong Carvana is, where those key levels are. Intraday fundamentals, 9 out of 10. I like how you do point out in pivotal factors the high short float. We really need to think about that before we decide to trade this stock. So you may find something that has a catalyst. You may find something that you score 8 out of 10 or above. If you don't find something that's also liquid, if you find something that's illiquid, you got to pass. Mm-hmm. All right. So when we're talking about short float, that's the question we're asking. Is it going to make the stock so illiquid at points where we want to pass? Because if a stock is too illiquid, it's too hard for us to control our risk. All right. Good trading necessitates a good risk reward opportunity. If we can't control our risk, we don't have a good risk reward opportunity. Okay, moving on.
All right, so to look at the technical analysis here, this is the day of the trade. So the day before this, we're actually very strong, and we get up to this important level that we're looking at, which is 30. And you can see off the open, we get this kind of choppy price action, right? So pre-market, there's no real decision being made. That's what that little comment indicates. And you can see we kind of sell off the open, bounce back up, and at that point, people who have shorted off the open are kind of getting trapped because we can assume that their stops are at the high of day. And then the longs taking that position off the bounce are also getting trapped because now we're turning back over VWAP, and you can see there's really no decision as to where this is going. And that's something that we really want to pay attention to because we don't want to be one of those stuck traders. We refer to this as a stuck trader scalp when we break out of this range. And that's something that, we want to keep in mind, knowing there's people off the open who are kind of getting caught off sides in both directions. Longs ended up paying out for them quite well, but, those shorts off the open, knowing that they're going to be playing a part in this breakout here is very important.
Okay, so when you're breaking down technical analysis, you want to break down the intraday technicals, and you want to break down the daily technicals, the longer term technicals. All right, so this is a very good job of breaking down the intraday technicals. Let's just ask ourselves the question, where are we on the daily chart? Where are we in the longer term technicals?
So at least for the past year, for the past 52 weeks, we are near the top, if not at it. So with that being said, I mean, the interesting thing about Carvana is that fundamentally it's still not a great company. So the fact that we are trading this high for the past 52 weeks has people kind of on edge. Like, should the stock be going higher? Like, is this being valued correctly? And that can give you ideas of, okay,
I want to think very clearly. I just want to think about longer term technicals and intraday technicals. So on our longer term technicals, is there any near term resistance?
Yes, at 30. That's the level we're focusing on here.
All right, good. And so we've got to deal with that with our breakout, our intraday breakout. Okay. All right, good. Good answer there. What I really love about, go ahead. I'll let you keep going.
Alrighty. So
okay, so we're done with that. So let's go back to that.
Okay. Yeah.
So I do want to point out something here. There is a textbook example of technical analysis in this slide. You do not see it very often. I mean, if I were to write another book, which, by the way, Dr. Steenbarger is trying to get me to do. He's lobbying me to write with a particular book publisher. He's like setting up meetings for me to talk to people, which I both appreciate and also lament. And so there's something here. If we were writing a book and we were looking at this slide, there's something that really stands out. Do you know what it is? And you do highlight it.
The volume.
Yes.
The volume increase.
You don't see that every day.
No.
That is that is an amazing example. If I were doing a presentation at a trade conference and I were looking for volume confirming a breakout, that would be a slide I would use. That's how strong of an example. I mean, look at the increased volume that comes into that stock when it breaks out. So when a stock breaks out, we do want to confirm it with increasing volume. And then lots of times you get a candle and the volume has picked up a little bit, but these are multiple increased volume candles right after the breakout. That is significant. All right, so scoring you again, I'm going to give you a 9 out of 10 on technical analysis, and I'm mainly going to give that to you because of what a good example this is in breakout with volume. I do want you going forward to just think more clearly about long-term technicals, here's the key level, next thought, intraday level, here's the key level, and put those together. Okay, moving on.
All right, so for the trade strategy here, we're going to get to the tape in a second, but there's going to be a moment on the tape where we really see the speed of the tape increasing over the level that we're focusing on. So 30 beginning level here, that's where we're going to see the speed of the tape increase, and that's where we want to enter. Kind of jumping the gun on this trade, I mean, you could argue with more experience, getting long at the low of that kind of range we defined in the last slide, could be getting a really good price. But also kind of anticipates the move. And as for someone with the experience that I have, I'm really waiting for more of that confirmation. We're placing our stop 10 cents below the breakout level. That way, if there's a retest, we're still safe in our trade. And also, it defines our risk very clearly, and it's not something you have to kind of leave up to like the moment, okay, where I'm going to put my stop. So that's going to be very important. To exit this trade, we can look for a variety of different things. So we've discussed some of the different exit strategies here at the office, with some of them being the first red bar, a double stuff, which we're actually going to see in this example, or a dinner's ready candle. And for those who don't know what that means, Basically, a huge capitulation candle where you see blowout volume. Typically, it's a massive stuff, but it can also be like an indecision candle. And at that point, you don't really know if the trade's going to continue in your direction. And on any of those criteria, we're taking off about 3/4 of our position. With this being a momentum breakout, you can expect some kind of continuation, so you can leave a little bit of your position on. But using that 9 EMA is kind of a guideline for a trend. Once you get a close under that, pretty easy exit criteria there. To get bigger in this trade, with my experience, I think adding to this can be a little bit greedy. I know others could
I
disagree with
agree.
that. Yeah.
We'll save that for later.
Okay.
We'll save that for your senior internship.
Deal.
Unless you don't do well on this playbook trade and Jeff doesn't ask you to come back for a senior internship.
All right. Let's hope that's not the case. So with this trade, you're going to make sure that depending on what kind of setup is for you, you're getting the shares that you want on your first entry. All right, so here's the trade management. You can see how I actually executed the trade, and we'll kind of get to my mistakes here towards the end. But ideally, after you see that break of 30 and the speed of the tape picking up, you're entering the trade. After you enter the trade, you're happy to see this volume continually increase. So you can see on the breakout candle, the volume there is actually higher than the opening minute candle. And that's something that's especially telling because usually those opening minute candles are the highest bars of the day for a lot of stocks trading. So you could see because that continued buying, the shorts having to cover their positions, momentum traders also entering in this trade. You're going to get that really good push up. You can see I have that note, poor take profits. We'll get into why I did that near the end, but that's not somewhere you want to take profits, right? We are seeing actively with the volume that the trade is working for us, and we want to let it work for us as much as possible. And that's why we have that defined criteria to get out. And then you can see this good take profits. We get that nice double stuff at the top there. That's one of our exit criteria for a momentum trade. Good exit there. And then after we get that close under the 9, I'm completely out of the position. Nothing more for me to do there.
Okay, so question for you. How important is that 30 longer term level? Is it kind of like it's a little bit of resistance because the stock's gone up a lot and there's just a little bit of overhead there, but it's, if we were to score that level on a scale of 1 to 10, it'd be a 6 or 7. Or is it a 9 or 10?
I argue closer to, I wouldn't say a 10, but closer to a 9. And there's 2 reasons. One, because it's kind of a defined resistance that we've had just from straight supply and demand. And 2, the fact that the short float from the point it broke 20 to the point now has maintained that percentage, which means for any kind of swing traders, shorter term, maybe even longer term traders, that's going to be above that level is where their stops are going to be placed for those shorts. And as those shorts are getting stopped out, they're kind of fueling this move up.
Yeah. So when I look at that intraday consolidation pattern, which you highlight there at the bottom, where the breakout is above 29, unless my eyes are failing me, but 29 is the price of the breakout, right?
30 is the level. 29 is kind of our pre-market.
Yeah, for this breakout though.
Of the range, yes.
Yeah,
the consolidation, yeah.
Okay. And then so if we're entering above 29, which is I think what you're advocating, is that correct?
Not 100%, just because I kind of want to see that more confirmation over 30, that we have buyers there and people are willing to take this up. As far as getting the best price, that's definitely something that could be in play and could be taken. But especially when we go over the tape here in a second, you're going to see the speed over 30 is a lot greater than it is over 29.
Okay. So you're advocating for a buy over 30.
Yes.
Okay. That consolidation is a consolidation near 29. So we've got a consolidation near 29. We have a 1 point up move above 30 pretty quickly. And then now you're saying, let's buy above 30.
Yeah, or as quickly as you can. When you see that speed pick up right over 30, yes.
Okay. That's okay. We'll talk about that.
All right.
We're going to have to really look at the tape there. Because the problem there is, and that's why I asked you about how big of a level do you think 30 is, and it's good that you identified that 30 is an important level, and that you kind of don't want to trade this unless we get above 30. But you've got to deal with the fact that the stock just came from 29, and it came from 29 pretty quickly. So, I mean, it could just go back to 29 and still be strong.
Yeah.
It's so early in the morning that this is going to have to be a momentum scalp. And you're going to have to be pretty careful that you see where you can get out if it doesn't go up right away. Because a stock like that, you could buy that at 30.01 and you could have a hard time getting out for 50 cents, 60 cents on some trades. All right, so good. Let's look at the tape then.
Alrighty, so you can see here we're still under that. We're still in this consolidation, and this period is going to be longer than really expected. I just really want to emphasize the difference in the speed of the tape. So you can see right now, this is a pretty average tape. I know for anyone watching this, my tape experience, reading experience was next to nothing before coming here. So this is what a very average tape looks like. Not much going on. There's no real direction. You're seeing prints on both the bid and the ask. No real decision being made. In a second here, we're going to start seeing the tape pick up. And when it does, we're going to be looking for two things. The speed, like I've mentioned in the past, and also in that time in sales to the right, we're going to want to see a lot of green prints, people hitting the ask no matter what, right? They just want to get in the stock and they want to get in it right away. So as this carries on, we'll kind of see it pick up here for a little bit. Keep that in mind because after we see...
What time is it?
Of the day? It's right at like 10:01. So we're still in that price discovery period. All right, yep, so we see the tape pick up there, volume jump a little bit. No trade decision to be made here yet for me. Yep, we're nearing 30. Tape's picking up. You can see we're jumping like 10 cents a second, which is pretty rapid. As you near 30 here, green prints, that's good. And then boom, yeah, we're at 30.20 in a second. And that's that kind of realization you need to have of like, okay, this is moving quickly. That's your entry right there. Okay, yeah, so we're coming back up again. Nothing. All right, we're seeing a little bit of a pickup. And then boom. Oh, no, not boom. Boom. That's interesting. I think 30.16 was the first thing I saw. When you jump from like 20.90 to 30.16, you're making like a 25-cent jump in less than a second. Like that's the kind of speed you're looking for. You can see all those green prints on the time and sales.
So you want to buy 30.16 there. What would be your stop?
It would be at 29.90.
29. You always set your stop at 89 cents. So never 90, always 89.
Oh, yep, got it. Yeah, for the psychological levels, got it. I mean, yeah. So risking, what is that? 30, not even 30 cents. What, 27 cents on a trade like this? Definitely a good risk reward. I mean, yeah, you can kind of just see the tape here pick up.
Well, this is why we have these playbook trades. So you can't buy that stock there like that. You've got to you could maybe buy a pull-in above 30, but that stock had moved too quickly, too far into 30 to be able to buy that just like that above 30. um, you would have to wait to see it make a strong move above 30. So if it had consolidated a little bit, maybe around 29.75-ish, and then sort of got above there, maybe you could have bought it. But I mean, that kind of moved from 50 cents, maybe even 40 cents, 29.40, 29.50, and then kind of got up there, got above 30, and then was like, I think maybe you could have bought that at 30.16.
Mm-hmm.
That's just not, I'm surprised it worked. It's not going to work a lot of times.
Got
You're risking 27 cents there with an opportunity that's just not going to work that many times. You do a really good job identifying that 30 level on the longer term technical, and this is a really good stock to trade. But the way to trade this is watch it have a strong move through 30, see it have increased volume through 30, and then buy a pull-in and trade it against the low of the pull-in using that 30 level. You're going to need a little bit more time. Your problem here is time is against you, because what's going to happen in a lot of these trades is you're going to pay 16 cents. You very well could have not gotten out of that until 39 cents. It could have just literally gone above 30, whoosh, right back to the 39 cents. And for a momentum scalp, it's not a good enough trade. I would have been fine with this trade if it was consolidating near 29.75 for a bit of time, and then it got above 30, and you got closer to 30, like 30.03, maybe 30.06. Stop 89 cents. But I really think your risk here is, I think you could have got stuck buying 16 cents and not getting out until 50 cents. I think your risk might have been 66 cents in something that maybe what do you think your upside was potentially? It's a scalp, so.
Yeah, it's hard to define exact because there's no real profit target for this playbook setup for me. It's just watching the price action, having that confirm when they're going to exit.
Yeah. All right, good. All right, what else?
All right, so for tech, this is...
So let's just go over that trade strategy. I just don't think the way you bought that works. But I think you did think through some stuff the right way. So we're going to give you 6 out of 10 on that. I just think you're not controlling your risk properly right there. And I don't even think you're making the right trade there. So that's a 6 out of 10. All right, let's talk about technology. Go ahead.
All right, so for tech here, I mean, this doesn't require much high advanced tech, but an easy way to alert yourself to this trade is by setting alerts. So if you're expecting this breakout over 30, setting your alert right below that level so you're there in anticipation of the move as opposed to catching up to it after it breaks is very important. And that's a super easy thing you can do on TradingView, Thinkorswim, or even with the software we have here at Great Trade.
Did you set alerts?
I did, but the mistake that I made was I set it at the level as opposed to under.
Okay.
We'll get into that, how that affected my trading. So to go over the trade review here, at least the biggest mistake that I made in this trade was I had set my alerts.
So technology will give you 8 out of 10 for that. To use alerts. I would like for you to be talking about, are there alerts that you can build to find good scalp trades like this, and working on that. All right, so 8 out of 10 with that. Trade review, go ahead.
So as far as how I executed this trade, the biggest mistake I made was I had set my alert at the level, not below. And what that kind of resulted in me, as you saw in my trade management, was getting in a little bit late. Although obviously my entry criteria needs to be changed as far as, kind of chasing it over the 30 level with the speed of the tape. In my head, when I took that trade, I knew I was kind of one of the chasers. And it kind of messed up with my psychology. I mean, that's why I had taken those 2 take profits.
Yeah, so here's what I think about this trade review. All right. I would love to see you. We talked about this the other day in the 11 a.m. meeting. I'd love for you to be identifying and recognizing the things you're doing well. I think it's really important with your trade reviews. I tweeted this the other day. You've got to recognize what you're doing well in your daily reviews, your monthly reviews, your yearly reviews. You want to be building around the things that you're doing well. And so the things you do well in this trade, like you picked a good stock. You did a good job recognizing some technical levels in the stock. You actually had a really great exit, by the way, in your trade management. The double stuff, that's a terrific way to exit a trade. And those are things that you want to be building on. I think you did a good job recognizing the market was strong in the big picture. I think you did a good job recognizing the overall technical level for this particular trade. That's got to be in the trade review. Okay? Because pointing out, and I said this sort of the other day, which is Garrett Cole was a starting pitcher in the American League for the American League in the All-Star game. In baseball, you are judged on your ability to hit, your ability to hit for power, your ability to throw, field, and run. Garrett Cole can't run at the Major League Baseball level, can't hit and hit for power at the Major League Baseball level, and can't field at the Major League Baseball level. But he can throw. He can pitch. And he makes, I think, $35 million a year. And I tweeted this. Do you think Garrett Cole sits around concerned that he doesn't run, hit, or field at the Major League level? He doesn't. He's one of the world's great pitchers. We build from our strengths. As traders, we build our careers from our strengths. We all have unique talents. We've got to recognize the things we're doing well and build from them. And I actually think there's a real skill to being able to recognize that for each one of our trades, each one of our days, each one of our months, each one of our years, to be able to synthesize everything that happens during the day and say, I picked a good stock. I picked a good level in a stock. I did a good job calling out when it was actually breaking out in the pre-market and building from there. Okay, so fine for you to point out in trade reviews the things that you should do better, but you also need the things you really do well. Okay, so all right, great. So trade review, we're gonna look for some more examples of what you do well. So we're gonna give you 7 out of 10 there. I think diligence of presentation is a 9 out of 10. I thought you did a pretty good job here overall. Can we go back to the trade management slide? I thought you did, we're going to give you an 8 out of 10 there. I thought you did a good job. I don't love your entry, but I really do love your exit. That's an excellent exit. That's one I hope you think about adding more to some of your scalps for and going from there. All right. Anything else?
That's all I got. Thank you for all the feedback.
Okay.
I appreciate it.
So we'll keep working on some of those scalps and getting you to have some better entries. I enjoyed this talk. On stock selection, we have 8.5. Big picture, 9 out of 10. Trade strategy, 6 out of 10. That may be more my fault and Jeff's fault. And you're young. That's part of it. We need to keep talking about good entries for scalps. You're probably a couple of weeks into being here with us. Intraday fundamentals, 9 out of 10. Technical analysis, 9 out of 10. Reading the tape, 9 out of 10. Good job capturing that key moment above 30. Trade management, 8 out of 10. Technology, 8 out of 10. Review, 7 out of 10. Diligence of presentation, 9 out of 10. What is that total? 82. You did it.
Made the cusp.
82.5. So as a junior intern, 80 is the threshold. So just above that. Senior interns, 85. New hire traders, 90 out of 100 is the expectation. So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.